Quantum computing stocks have been an absolute roller coaster over the last 2 months. Let's take a look at what's going on behind the scenes to whether or not it's justified or whether or not buyer beware on quantum stocks. So this is ticker QTUM. It is an ETF that holds all the quantum stocks. It is the biggest ETF in the subsector, and as you can see, it did really well over the last few months from $60 all the way up to $85. But what is happening within it is far more interesting than this actual move. Let's take a look at what is in QTUM. My personal advice whenever you buy any ETF is to look what they hold. When you look at what they hold, you may change your opinion. A quantum stock ETF sounds so fantastic on the surface, but let's take a look at what's in QTUM. Biggest holding, D-Wave Quantum. Second biggest, RETI Computing, then Onto Innovation, then Teradyne. We have to get all the way down to the number 6 holding here, Taiwan Semiconductor, to have a name that I've even heard of, right? So let's take a look at D-Wave and RETI and Onto and these names and what's actually happening behind the scenes for quantum. Quickly before we go into any of the individual stocks, take a look at shares outstanding for QTUM, the ETF. And as you can see, in November, right here, there was a large technological revolution in quantum computing that came out, and everybody absolutely ran to this ETF to get exposure to it. 4.5 million shares outstanding became 11 million shares outstanding. And what does the ETF have to do? It has to go in and buy all of its holdings, indiscriminate to essentially what's going on with the fundamentals of the companies, but it has to just add and add and add in quantum computing. Let's take a look at the top 2 names in QTUM to see whether it's justified. Let's start with the number 1 holding, D-Wave, ticker QBTS. You can see the stock goes from $1 and change all the way up to $10. Congrats if you owned it, essentially, and then comes all the way back down to $4.40. Just crazy moves in this. Let's take a look at RETI. That's the number 2 holding as well. And as you can see, almost the exact same thing happened to RGTI. Stock went from a couple of dollars here all the way up to $20, back down to $7.60. Let's look at what's going on inside fundamentally at RGTI to see if any of this is justified. Short answer to is the move in RGTI justified is absolutely not. This company traded at over a $2 billion enterprise value, and they do just 11 million in revenue. Now, of course, they've got a technological product in quantum computing, so it's looking to grow, right? Guess what? Expected growth for this year is negative. The company also does nothing but lose money. Loses in EBITDA, loses in net income. Not uncommon in sort of these small startups, essentially, but you are paying $1.5 to $2 billion in enterprise value for a company that does just $11 million in revenue and loses money. You are buying this on a technological upside, a hope that quantum computing happens very, very quickly. Guess what? Guess who came out and said it's not going to happen very quickly? The CEO of Meta, the CEO of Google. Everyone who is at CES loves quantum computing but thinks it's a decade away, and you are paying for all of that growth right here and right now, especially when you buy the QTUM ETF. This is a buyer beware situation. You are overpaying for the stocks within this ETF, and you are probably going to be very sad if these stocks all go all the way back to $1 or $2 or where they started, because they cannot prove out quantum computing just yet. So buyer beware on quantum computing stocks. They are absolutely a fad right now. We are staying away from them. Thanks so much for everything you guys do for us, for all the hits, all the likes. We really appreciate it. Subscribe at our YouTube channel. That's starting to really take off. We really appreciate it. And hit us with any names that you want to hear.